should be on YouTube. I'm on the computer that's been giving me problems on YouTube. I worked up with the tech team a little bit today to try to do some fixes. They also said that I got to just call my internet company because they are giving me nowhere near the speed that I'm paying for, which I think is like kind of typical with those providers. But I'm gonna try to do that tomorrow, and hopefully that'll help. I said my upload speed is nowhere near where it needs to be um, for streaming, and I think I'm paying for a lot more than I'm getting. Let's hop into our meeting here. If anybody's got the YouTube link and they can post it, unfortunately, I don't think it's probably the highest quality today, but I'm going to continue to work on that. It's particularly this one setup from my apartment in New York that's been giving me the issues. But I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure update. I kept a very small amount of that Peloton, very small. I sold a large percentage of my position into the close, kept a very small amount. So I'm in the money on it, but who knows what's going to happen with that CPI, so I'm not really looking to add a lot of new risk into so much uncertainty. We certainly saw it happen last time, right? All right. How did our market close? S&P here is down about a percentage point. Qs are down a percentage point. IWM, highlight of relative strength, only down 0.36%. I like that. I like that IWM being relatively strong. All right, so coming into today, what did we discuss, right? We had like I think a very small common gap to the downside this morning. Common gaps tend to get filled, did get filled, but it was small. And what we also discussed is that the market is kind of in the midpoint of this wedge. You guys remember back here on June 30th, we discussed the possibility of the market building out a wedge, and that is pretty much exactly what happened, right? We've just got this tightening pattern that's been ongoing here for a couple of weeks, and this is coming into the CPI number. So with a smallish gap to the downside this morning, it's taking place kind of in the middle of this wedge pattern that's building out with the CPI number tomorrow. Not a strong advantage for us today, right? At least where it comes to the market. So we did discuss, like usual, whenever we feel like we don't have a strong advantage with the market, we want to focus on names that are in play, or we want to focus on areas of really, strong relative strength or weak relative weakness. Would it be strong relative weakness? Is that the right way to say it? Where there's a lot of relative strength or where there's a lot of relative weakness, to try to eke out a living for ourselves and try to make a couple of bucks. And that's what I did, and I would say I did it successfully. I was hands off in the areas that I wanted to be hands off, and I put some trades on some spots that I felt were okay. The intraday price action here is pretty much as expected. We talked about maybe today would just be a choppy day as people wait for the CPI, or maybe it'll be another de-risking day. This was the last day before the CPI. This June 9th, they destroyed the market going into the report, and then obviously the report was real hot, so they destroyed the market for 2 days after that. I do feel like the broader sentiment coming into the CPI, and this is important, coming into the CPI number, is a lot more bearish than it was on the last report. Going into that last report, you guys all remember, we talked about it in the morning meeting, there was just a lot of chatter about peak inflation, right? Oh, this is where we're going to see peak inflation. Is the peak inflation here? Blah, blah, blah. And the market had, been bought up into the end of May, went sideways the entire beginning of June, and then we broke down out of this consolidation the day before the CPI, which was basically de-risking, and then we just got destroyed down to New Year lows after an atrocious CPI number came out. Here, the market is, a good bit off of its low for the year. This 365 area coming into today, 385 area. So we're 20 bucks off that low. So there is also a little bit of a bounce here off of lows. But The big difference here is it seems like after the last number, everybody this time around is really expecting things to just be as bad as they can be, right? I don't hear any chatter about peak inflation coming into this CPI number. As a matter of fact, it seems if there is any chatter, it's just about, well, how bad is it going to be? So recognizing sentiment coming into something like that is important, because if that sentiment's really bearish, exactly, Dan. If that sentiment is like, just really bearish coming into it, it tends to price in more of the downside. And if it's really bullish coming into it, kind of like it was last time, maybe not really bullish, but certainly more bullish than here, then that's maybe priced in a little bit also. So that partially led to just absolute destruction last time. We'll see what happens here. Um, I know Josh has kind of made some comments about if the CPI number does come in higher than expectations, that maybe there's a chance of even a rally off of that, just because maybe people are already looking into the July number with how much oil has come down in July compared to where it was. I don't know. Um, I'm still in the camp of, we had a number that's worse than expectations. The market's going down. Maybe not as bad as last time, though it depends how much worse than expectations. And I think, and I thought this last time too, but obviously the number was atrocious last time. I think that if the number comes in line or down, especially down, then you get a rally off of it. But even an inline number, I would be inclined to think on an inline number up over down. Um, but we'll see. So there was certainly a probability, though, of a real big de-risking day into the number like what we saw last time, and there was a little bit of it, right? Especially into the close. This last hour here, starting a little bit before 3 o'clock, this sell off from, let's call it 2:55 Eastern down to this low at 3:35. This sell off here was ruthless. I remember I was stuck in a meeting here still at 3 o'clock, just watching the market crater out of the corner of my eye. I'm like, oh my god, I got to get out of this meeting. Um, there's a little bit of a oversold kind of bounce here, which really just turned into a time correction with an inside 5. EDMA caught up. This basically becomes a bear flag, continuation of the downside. Then your next hammer actually led to a little bit more of a real bounce. I don't know. This is just de-risking coming into the number tomorrow. I don't want to overread it. It just kind of is what it is. As far as a trading day today, again, we discussed in the morning meeting that today's probably a little bit of a less is more type of day, just based on the technicals of where we're opening, plus the CPI number tomorrow. But there were a few pockets of, kind of decent trades. First of all, growth traded well, which we discussed as a possibility this morning when the TLT was trading up. Granted, the TLT kind of came down a little bit during the day from those highs, but we discussed that growth maybe would be an area of relative strength, and that did actually happen. More particularly, I brought up LUV in the morning meeting. I didn't get this one, but certainly a really nice trade if anybody caught it. It got upgraded. In addition to that, you had American Airlines kind of provide earnings guidance, and obviously the price of oil being down helps the airlines just generally, even though a lot of them are already locked in with futures contracts. So we talked about LUV long versus 37. I don't know if anybody was able to nab this kind of off the open. It was not a small amount of risk for a $37 stock. But if anybody did grab that trade, you pretty quickly, once the CDMA caught up, could raise your stop to the low. And then the follow through on it was pretty solid. Even when the market rolled over and got weak, which was basically, we had like the strong 10 minutes and then the market really got weak. And we talked about with the market and with a lot of those growth stocks, when you have an opening momentum move that gives 100% plus retracement of that opening momentum move, that usually leads to weakness, and that there's a pretty low probability of a new high coming in that day for the rest of the day. That's pretty much exactly what happened. But even as the market rolled over after 10 minutes, these airlines, Southwest being the one that was on my radar, held up really well, continuing upside grind, and gave pretty good risk reward. I had AMC on my radar today. This is the third long I've taken in AMC over the course of probably that many weeks. I hate this company. I think that AMC is like worthless. I think this thing's worth like $3. And in 2021, it was one of my best names of my year, and it was to the short side. But even with that thought process, the technical trades have been here to the long side on a few days over the course of the last few weeks, and I got no problem, making some momentum money to the long side when it's actually there. So we talked about, showing some pre-market relative strength. We talked about just a long through the inside day high. The inside day high is $14.99, so the buy trigger would be $15. I bought exactly that price. I bought $15 as the market opened. Stop loss a penny below the low of the day. So below the day there was $14.91. Put my stop in at $14.90. 10 cents worth of risk. Very quickly, I was able to cover my risk by selling some stock. Put this great move here up to 1564. I think my best sale was like 1540 something. Not bad. And really liked how this thing was holding up, even into this pullback, right? And this is when the market really deteriorated. This thing pulled back to the 80 MA. It tried to bounce. The market deteriorated further. I thought that this was a fantastic trade. Unfortunately, the market shook us out, right? This thing made a new low of the day at 10 a.m. Look what the market was doing at 10 a.m. That was the opening low here for the market. And it was just a very weak market from the 940 high down to this like 10 a.m. low. And unfortunately, that's what pushed me out of my AMC stock. Because then, after shaking out that low because of the market weakness, and I even briefly reconsidered buying this inside 5 and up, but I didn't see any reason to be particularly aggressive and kind of go back to that well. I don't want to turn a winning stock into a losing stock, so I didn't take the trade. Just got pushed out here for a win, because obviously for a win, 10 cents worth of risk here gave me 60 something cents worth of reward. So the only way that you're not profitable in AMC is either because you didn't trade it correctly or you're just absurdly greedy. And that's what I love, right? We talk about this when we talk about game planning, putting yourself in the position to be able to make money on a failed trade, because this is still a failed trade, right? It broke my stop loss to stop me out. But even with that, I made money in it. So let alone if I hadn't, in some other universe where the market wasn't as weak as it was, and I didn't get shaken out of this, and I caught this entire move, and it, worked its way up to 16 plus and closed well, and then maybe you swing it. I would struggle mentally to swing AMC, but it's usually exactly, $15 stock and catch a dollar move and closes at 16 bucks. That's exactly what I would want to swing it to try to maximize reward. I think I did everything right on it. Made a couple bucks, got pushed out. I'm happy with the trade. It just is what it is. Can I share my sales at AMC? There you go. Here's my big buy at 15 bucks. What you can't tell is this is actually there's a lot of volatility in this first bar. The stock went from $15 to this tail high of 15.35, and then it went to like 15.02. So I rebought some stock here, I think at like 15.06, which I then resold that stock on the way up. Tried doing a little rebuy here, and then whatever. Eventually, this thing failed, and I got a few cents worth of slippage on the stop loss on the way out, and still made money in it. So there's the execution, kind of how I traded it. And again, you can just see here. I think I said my best sale was in the 1540s instead of 1549. Just kind of selling as per a game plan, and then after my 1549 sale, the rest of the game plan, which I didn't get to implement, was just entirely to trail everything else that I still had, but never getting the opportunity to do that because the thing eventually failed. So yeah, that's AMC. I tried Microsoft a couple of times today. I really didn't have any success with it, for obvious reasons. This was super relatively weak. And I even said one time, I called out, I honestly don't even remember where that trade was. I think I called out a long off of this candle in Microsoft at 10 a.m. It put in this little tail. It snapped back through 258. It was super extended. And I was like, you could try it versus this low. It's just so relatively weak. You're better off going after something that's relatively strong, like an Apple. And I still stand by that. It's better to buy relative strength than to bottom pick relative weakness. And I understand from a counter trend perspective, I will take counter trend trades. I did it in Microsoft today. I'm down money in Microsoft today, but it's a small amount of money because I manage my risk on it properly. it's always easier to buy the relatively strong stock than it is to buy the relatively weak stock. Granted, you can look for, and this is what we've discussed plenty of times in the past, the proper way to buy something that's counter trend, right? We don't catch a falling knife. We buy it on the way up. We make sure that we're buying versus a level that the stock had already put in, and you're buying it on the way up, and you want extension, and you want volume confirmation. So, I tried this thing a couple of times today, and this is an example. I don't hate this trade. I just don't think it's an easy trade, even though I was involved in it, right? Where it puts in this little bit of a tail. It's back through this whole number 258. It's after just ferocious downside candles that have it extended. All I'm looking for off of this candle, and I got decent consistent volume. I would like the volume on this particular candle to be a little bit higher than it is. All I'm looking for on this trade is to risk versus this low to try to get a snapback in the equilibrium area. Maybe, if I execute this properly and the volume confirmation was there, there's a decent chance of getting a snapback to even as high as 260, which if I can come in and I can take, 35, 40, maybe 50 cents worth of risk, it's worth it if there's a potential of a $2 bounce off of that kind of initially. And that's all I'm looking for, right? And I want to get my risk covered very quickly, sell more into the 80 EMA, sell more into the 21 EMA, which is going to be target number 2 on these kind of downside extension counter trend type trades. That's all we're looking for here, especially in the counter trend universe, is like those singles and doubles to put a few dollars in your pocket, and you do it very strategically. And of course, trades are going to fail. So that's pretty much what happened here. This trade failed. I tried a second trade here. I started very small, so I didn't actually get stopped out on this pivot with the stock, and I was able to kind of work it a little bit into this kind of bounce back. And I think I rebought some here, and I sold it here, and then I got out of that trade, and then I actually did try this one more time at lows and was able to kind of capture this little bit of a balance, and then fully liquidated my position into the close, and ended up down very small in the name, which I'm fine with. I'm totally fine with. To be down small, and when Microsoft had one of its worst days that I can remember, I'll take it. And and Peloton. Peloton was the only other one. I traded it. I know some of you guys also traded it. This trade started pre-market for me, and I traded this Peloton honestly pretty active early on. My original game plan was basically to use $9. I started very small, and then to use $9 as a stop loss, and it's kind of trading off of news. So at one point, I was considering using this bar's low, the 7:55 a.m. bar low, as my stop, which is $9.20. You got to ignore the 80 a.m. A bar because it's just kind of when the market is flippering crazy and you get all those nutty prints. But the spot when this thing kind of really woke up on the news, even though the volume was super light on it, was this 7:25 a.m. candle that has a low at $8.97. I was basically using $9 or below $9 as a stop, and I was so light in it that I always want to be honest with you guys. I always really encourage, especially new traders, to have stop losses and everything they do. I was so light in this thing initially pre-market that when this thing first opened up, I didn't even put the stop in. I was just kind of watching it, and then it held $9, and I added to my position, and I kind of traded it a lot back and forth, and then then I needed once I have a little bit more size, then I certainly have to have my stop loss in. So I was able to trade this thing back and forth. Unfortunately, it eventually died because there was a time here, like when I put in this tail at 10 a.m. But I thought that this thing was looking solid. It started to kind of grind higher. The market was very weak, but this thing was holding in. Growth names were showing some relative strength, and I thought maybe I could be onto something here. And then unfortunately, it just totally died. Now I got to stick with my game plan, and I do want to call out some of you guys. I think bailed on this thing because it stopped moving, and I don't really ever like to do that. Um, I'm a big believer in buy the ticket, take the ride. I think my YouTube has a whole video where I talk about, if you put the risk on the trade, let the trade follow through. Because let the trade follow through because you already assumed the full risk. Like you could have bought this thing at the open or whatever people bought it, and this red bar could have instantly just stopped you up below $9 and you lost your entire risk. So the fact that this thing's trying to hold in, but then it just gets boring. I don't think that boring is a reason to liquidate a position. I think that you have your game plan on. By that point, your risk is hopefully covered. I'm just going to sit in this all day. That's kind of why I asked at one point like later in the day when this thing was just totally dead, who still got it? And I think the only person that responded to me that said that they were still in was Brant. And I know it was more than just me and Brant that were in this at one point. So I don't condone just getting out of a position because the position got boring. I think that you assume the full risk. You want to be there for the reward. Because, yeah, this thing got boring as heck. But, and I know the market eventually took a big dive. Maybe the opposite happens, right? Who knows? I don't have a crystal ball. Maybe instead of that dive, the market catches a big bid because I don't know. Expectations are already in on what this CPI number is going to look like, and people come in on the opposite side of the trade and they buy up the whole market. I don't know. I'm just making up a scenario. That's not really the point. The point is that at any point in time, you get a market rip, or the stock could wake up, and you've already assumed the risk. So I think that you want to let your trade play out, and that's pretty much exactly what I did. Now coming into the very close is a different situation because now you have to assess is your profit cushion good enough to swing it. And that's what I was talking about a little bit earlier with AMC. If this AMC, never shakes me out and it closes at 16 plus today, I hate AMC as a company. But if I got a $15 stock that's closing $1 plus in the money for me, even a company I don't like, just from a game plan perspective to maximize reward for the risk that's been put on, it might be worth it for me to even swing AMC to the long side with just a little bit of stock. And again, I know with the CPI tomorrow, which is a whole nother reason to honestly not put on any initial new swing trades onto your portfolios, because the 1% rule that I like to use for swing trading is out the window tomorrow, right? The market could easily be down 5% tomorrow on that. If we see a 10% plus inflation number come in, I don't know, we could be down 5% on that. So maybe that standard, 1% guideline that I like to use, and we know for growth stocks or for, or just in this market broadly because it's been so volatile, or for names that are very high beta, maybe you want more like a 2-3% intraday profit cushion to keep a position overnight. But if you got a $15 stock that closes like $1 in your favor, you're only limiting reward by exiting it, as opposed to Peloton. Peloton closes at $9.25 today. It's hard to have an average price or to have locked in too much profit in this thing that's going to be significantly better than that. And I did lock in some profit in this Peloton. I'm up an okay amount in it because I honestly traded it well. But even with that, there's no justification for me to keep a real position in Peloton overnight into the CPI number. So that's then the question that you're asking yourself under the close. Does this justify from a win-win risk reward, kind of game planning perspective, that win-win situation that we're constantly seeking to put ourselves in as traders consistently over time? Am I in enough of a win-win that's worth it to put on a new trade overnight to add to the portfolio, especially for me because I've already got longs on, into this CPI number? And the answer to that, honestly, is probably not. So I liquidated a bunch right into the close, and I'm keeping like a very, very small amount of this Peloton. Honestly, for no other reason than just interested in it. We discussed a couple weeks ago coming up with a potential list of stocks that are in this, potential buyout scenario. We've talked about a lot of these growth names that are just absolutely destroyed. And I've posed the question to you guys, the team here. Is there a list of growth stocks that are down 75 to 95% that do have a path to profitability and could become real companies, or could provide a creative value to other companies that are currently in existence via buyout? And some of those names I think are worth looking at these prices. Whereas some of the stocks that were the crazy meme IPOs of 2020, 2021 are probably legitimate zeros. I think that these names are down enough where we can start to try to filter out the good with the bad a little bit. And I do have Peloton on that list, right? Like I said in the morning meeting, there was chatter about a Peloton buyout by Nike or Amazon or Apple back here in February when the stock was a $30 stock, right? And traded up to 40 on that rumor or whatever it was that kind of came out on that day. So there's a whole bunch of these, right? We've got Peloton we've discussed. We've got Roku, which, there's been chatter about with Netflix. There's been Robinhood. There's been some chatter about that. Even Sumo here, there's been some chatter about that. So I've got some of those names, and again, I would still love to hear. And then like there's another like WeWork, which WeWork, I don't think it's going to get bought out by anybody, but I think that this is a real path to profitability and isn't a zero. So I'm still waiting to hear from you guys on if there's any other names that should be kind of in the list that have a real path to profitability. Path I think is a good one. That's why I'm in some of the ones that I'm in. That have a path to profitability or have the potential to potentially get bought out and be accretive to another company that we could potentially look at. OLPX. Pins. That's the other one. And I'm in pins also, right? Though I might get stopped out soon if this thing stays weak. I'm just still in off of this day here from July 5th. OLPX. I'm not familiar with this company, but maybe it's worth me learning a little bit more based on what you're saying. So that is pretty much all I've got. It's all about the CPI number tomorrow. So a little more de-risking into it. The CPI is obviously the most important economic number of our kind of modern market times here. And in some ways, it's starting to feel like the most important economic number ever in my career. So we'll see. Seeing maybe Fubo from Sharia area. That Fubo is so destroyed. That would make sense actually for Fubo also to be part of border consolidation. My problem with Fubo is I've never used the product myself. And I do like to look at a product of some of these companies and say like, oh wow, this is interesting. And to be fair, I've never used Pinterest either, but I know like my wife does as an example. And I know that Pinterest is working on new things to build out purchases directly through the app, stuff like that. Fubo said cash flow positive in 2025, which 3 years down the road, not that far away, 2.5 years down the road, I guess. But that's in this type of market environment, people are not paying for the future anymore. That's for sure. Cool. So that's all I got. Happy to answer any other questions you guys have. Let me scroll back up into the VTF to see if I missed anything. See a bunch of chatter. I'm saying it could be viable if it's not the. Oh yeah, it's the CPI. Jerry, we went over AMC already. Housing from Panda Patrol. Housing is cracking pretty hard in Southwest Florida. Investors have packed up and left. Yeah, interesting. Florida's historically has just been such a super volatile real estate environment, right? But it seems like we're seeing that kind of across the board now in the United States. Lots. I don't know. This one might be a zero. Somebody once told me lots was a good one too. Back up at $10. But I stopped myself out of that. Granted, it was for a sizable loss. It is what it is. I didn't still have it at 42 cents. Brutal. Tilray, yeah. Tilray from Blaine. I've taken issue with some of these companies for a long time. These Canadian marijuana companies. And I honestly struggle a little bit with the industry as a whole as far as like public companies go. I said going back to the IPO, and obviously this thing has had its share of runs. I don't see what room a Canadian marijuana company has. Like the whole bid on this is supposed to be like federal legalization in the United States. I just don't see what advantage a Canadian marijuana company has. They don't have an advantage in growing if you're based in Canada. They're huge in the German market. But the other thing about marijuana as a product is that, and unlike tobacco, I just think it's just so easy to grow. So I've always seen the marijuana industry, as an industry that just is full of small players, as opposed to the cigarette industry, which is completely dominated by just a few major players. It's actually interesting because right around the corner from my apartment, they just opened up a recreational marijuana spot, and this is here in New York City. which my understanding was even though they legalized it for New York, that they didn't have any of that going on. And I had actually been drinking a few beers with a trader at like a bar that was basically next door to this place. So the guy out front of the marijuana dispensary, tried to usher me in as I walked out, and I said I wasn't interested, but I started having some conversations with him about his business because I was just really curious about it. Because I was like, how are you doing this? And he was saying it's brand new, and he was like, oh yeah, basically, it's decriminalized, so we don't have a license, but I don't think that they're going to do anything against us. They're trying to build out licenses for New York, but um, it looks like it's only going to go to like a handful of super rich players with millions and millions of dollars who can get the licenses. So what we're doing, and there's another one that opened up near my apartment also. Um, so I guess that they're doing the same thing. They're just opening the business. They're saying, forget the license. We're just going to open the business. We're not doing anything that's illegal. We're trying to occupy like a loophole here. So when they start giving out licenses, hopefully we can just piggyback off of somebody else's, or we have a loophole because our business already exists, and that's the extent of what we're trying to do. Now, do you want to come in and buy some pot? And I was like, I'm good, but man, there were people coming in and out of that place. So interesting to see like these illegal recreational businesses that are actually opening up here. Mr. Trees has an opinion. As a former MJ grower, I can tell you that one, it's not that easy to grow, and two, lawmakers are constantly trying and succeeding to make monopoly laws to get rid of the little guy. Well, the second part there is really interesting. I mean, on the former part, I've seen my dad's tomato garden. It didn't look like he put a whole lot of effort into his tomato garden, but I can tell you it wasn't only tomatoes. So, so that seemed like it was growing pretty easily. And I've never understood. Like I don't see people. I'm not doing anything. Oh, here, thanks, thank you. Um, so I'm not. Yeah, so I don't know. I've always felt like I've never seen anybody like grow their own tobacco plants in their backyard, but I've certainly seen plenty of people have their own marijuana plants in their backyard. So what's to stop you from just doing that as opposed to buying from the Philip Morris of marijuana? But I don't know. And again, the fact that it's a Canadian company is what's always turned me off. Because if they legalize it in the United States, I think that just helps American companies. And then you look at what happened in like Oregon, where my understanding of the marijuana industry out west there was that they, because it got legalized in California and Oregon, a lot of these places, and it's a good place to grow. I guess they grew so much of it that they couldn't even give the stuff away. So that was kind of interesting also. But that's all I got for you guys on that industry. So from Johnny Hayes here, do you look for tails on candlesticks as a sign of reversal strength, or do you expect them to usually fill in? So candlestick analysis is a large part of my trading, and I actually have a whole class on my training program that is on candlestick analysis. Um, I don't think you can only look at the candle. So the candles themselves, as part of candlestick analysis, I'll trade off it. It's certainly part of what I do, but it's about the context. It's about what's happening coming into the candle that was formed. Am I looking at a doji that's just in a consolidation and it's midday? Well, it's meaningless. Am I looking at a hammer candlestick in a downside extended stop with increasing volume? That's a potential trade. So yeah, absolutely. And again, that would be more for retracements, not necessarily reversals. So I'm a big believer in not calling for reversals. I'm a big believer in having rules in place where you look for retracements, and then having rules in place by which that retracement can become a reversal and taking advantage of it. Blaine saying that he thinks that Tilray will be a survivor if any of them survive. I always thought that CGC was supposed to be a better company, but I don't know. Stock price certainly isn't agreeing with it. I really don't know. Right, and there's more than just the raw material, right? Right, you got concentrates, you got edibles, you got all that other stuff where there's an industry. This looks like there's so many people in the space. Everybody's rushing to it. So that's all I got. Any other questions, or shall we shut it down and just wait for the CPI tomorrow? I think it was a decent trading day. You know, if you were patient and you didn't push things, you didn't overtrade. You know, it's really important to not know, or to know when not to overtrade. Take a step back. So I think if you follow the morning meeting game plan, you followed the stocks that we discussed in the morning meeting, things that were in play, things that were relatively strong, and you picked your spots, could have been a decent day. It was for me. I had a decent profitable day today, despite the fact that the market was weak and was down, and we lost by 380 there briefly, and we had that sell off in the last hour. It still turned out to be an okay day for me today, just because I followed my game plan. I hope that you guys did too. So good. So let's just end it there then. All right, have a great night, everybody. See you all tomorrow. Wake up nice and early and expect fireworks.